Hi to everyone. So today we are into the second class of final accounts. So first class we have completed first seven set of adjustment. In today's class we see the next seven set of adjustment. So to have a short recap of what we have done in the before class, we are in final accounts, that is preparation of trading, P&L account and balance sheet. So we know trading account is prepared for the purpose of to find out the gross profit, whereas P&L account is prepared to find out what is the net profit or net loss, balance sheet to know the position of the company. And we would have completed seven adjustment closing stock. We know the rule that the item which is being given in the adjustment as a twofold effect, and the item which is given in the trial balance will have one-fold effect. And first seven adjustment quickly I'll tell you. First was closing stock we saw, so it has one in trading account and another in the balance sheet asset side. We would have posted, see, balance sheet la current asset la we would have posted like this. Then we saw about next four set of adjustment, where I would have given you a short table to just memorize it. That is outstanding na add it and put it in liability with the respective expense. Prepaid na subtract and put it in asset. Accrued income na add it with respective income and put it in asset. Income received in advance na subtract it with the respective income and put it in liabilities. Then we saw about next two things was interest on capital and interest on drawings. So interest on capital is expense item for the company, so it will be in debit side of the P&L account. Interest on drawing is an income to the firm, so it will be on credit side of the firm. Whereas for the partner or for the owner of the business, if it is a sole proprietor, we call towards the capital, interest on capital has to be added, whereas interest on drawing has to be subtracted from the capital. So this is the first set of seven adjustment we saw. Now moving on to today's class. So we'll move on to the next seven set. We'll move on to the next easiest thing, that is depreciation. As you people know, depreciation is nothing but wear and tear of usage of the assets in the company. So some percentage would have been given. So plant and machinery, furniture, anything they might ask you to find out the depreciation amount. On the amount of the asset, there might be some percentage given. Apply that percentage and find out what is the depreciation. First do it in the balance sheet. That will be easy. So first finish off that and put it in the outer column. Find out the depreciation amount, subtract it and put it in the outer side. Then go to the P&L account and you will write to depreciation on whatever the name. Plant and machinery na plant and machinery, furniture and fitting na on to depreciation on furniture and fitting. You will write it in the debit side of the P&L account. Okay. Then comes the most important adjustment. Three adjustment for that is bad debts, provision for bad and doubtful debts, and provision for discount on debtors. All these three things, that is bad debts, provision for bad and doubtful debts, and provision for discount on debtors, is to be done simultaneously in the balance sheet first, then move on to the P&L account. Okay, it will be easy. Okay, and there might be a confusion, that is bad debts, that is the amount which has not been received. There might be two things that might there. Adjustment la, if they might give you all these stuff like bad debts, provision for bad and doubtful debts, and they might give you in the trial balance also. So for our understanding convenience, what we will named the item which is given in the trial balance, we call it old bad debts, old provision for bad and doubtful debts. The item which is given in the adjustment, we call it to be new bad debts and new provision for bad and doubtful debts, just for our understanding. Okay, so it is easy for us to do. So first thing what we know, trial balance will have one fold effect. adjustmentல இருக்கிறது two-fold effect. So adjustmentல இருக்கிறது two-fold effect we have to do it. First do that. Okay, so if you have in both the place, do what is being given in the adjustment. So adjustmentல இருக்கிறது we call it new. Okay, so balance sheetல debtors value எடுத்து எழுதிக்கோங்க. That would have been given in the trial balance. Just take it and write it. Then subtract new bad debts. What is given in the adjustment amount itself they would have directly given. So we call it for our convenience new bad debts. Subtract that, you will get one amount. On this amount only you have to calculate provision for bad and doubtful debts. It might be over 5%, whatever might be. On this amount calculate 5%, and if some doesn't have anything relating to provision for discount on data, stop with this and put it in the outer column. Suppose if they have even provision for discount on data, on this value calculate the provision for discount on data. Again it might be over 1.5% or 2%. Apply on the amount which you got it after this point, after this answer, that is you will get one answer, that is the provision for discount on debtors. Subtract it and put it in the outer column. If you don't have the provision for discount on debtors, just skip this step and straight away you can have the answer. So first you will do it in the balance sheet. Okay, then go to the P&L account. P&L account, one more format I'm going to tell you. Okay, so here what I informed, there might be two bad debts, that is one in trial balance, one in adjustment. So our convenience, the item which is given in trial balance, we call it to be old bad debts. Okay, so that old bad debts, add your new bad debts, that is the format. Okay, I'm telling you the format, please memorize this. Old bad debts, add new bad debts, add your new provision for bad and doubtful debts, subtract your old provision for bad and doubtful debts. So this is the format, just memorize it and apply it. Whatever is being given in the trial balance, old bad debts எடுத்து எழுதிக்கோங்க, new bad debts just now we have done, or in the adjustment it would be there, just write it. New provision for bad debt full debts, just now we have found out in the balance sheet. From there please copy it. It is usually a percentage, so adjustment la you can't have the figure. So from the balance sheet just copy and write it perfectly. Then add all this stuff, subtract the old bad debt if it is given in the trial balance. If this is not being given, imagine if it is not given, just ignore the step and put it whatever answer you got it here. Okay, if it is given, subtract it and put it in the outer column. Okay, then next is you might have new provision for discount on debtors, whatever the answer we got. Sometimes there might be old provision for discount on debtors also in the trial balance. If it is there, subtract and write, otherwise just write provision for discount on debtors. Okay, so this is the next adjustment. Then same way there might be sometime rarely provision for discount on creditors also. So from the creditors, same way apply some percentage would have been given, 1% to 3%. Just apply the percentage and find out the answer and put it in the liability side of the balance sheet. And it's a like provision against your payment. Okay, sometimes you might get a discount, all those stuff like that. So it is a profit thing or provision which is an advantage to the firm, so it will come in the credit side of the P&L account. So here also you might have old provision. So if it is new provision and the old provision, if it is given, you subtract and write. Mostly these things is not coming nowadays. Okay, so after posting all this stuff, just find out what is the net profit. Just total it up, subtract all this stuff and find out net profit. Or you might have net loss, any one of the things. If it is a net profit, add it with your capital. Okay, if it is a net loss, subtract with your capital. So again this format plays a very important role. Okay, so balance sheet la liability side la memorize this format, that is capital, add net profit illa subtract net loss, less drawings, less income tax, add your interest on capital, subtract your interest on drawing and find out the amount of capital. This is called the closing capital, whereas this is called the opening capital. On opening capital only we find out the amount of interest on capital without making any adjustment. Okay, like adding net profit drawings and mother. Okay, then you might have any reserves, loans might be there. Okay, loans, okay, there might be sometime outstanding loans also. Just find out what is outstanding loan. If it is, then add it and put it here. Okay, then sundry creditors, bills payable, these are outstanding and expense, income received in advance. Then in asset side la goodwill is the first item. This is usually the procedure to do the sum. Okay, neater it will be. So first goodwill, if it is there, you write it. Then you write land and building, plant and machinery, less depreciation, furniture, other assets along. After investment is also an asset, you write it. After investment, you go in for current assets. Okay, so current assets like you can have closing stock, bills receivable, debtors. Then comes the last item like prepaid expense, accrued income, then cash in hand or cash at bank you might have. So after posting all these things, just pray to the God that the total of the balance sheet should get tallied. If it is get tallied, then the sum which you have done is perfectly correct. Okay, so this is a very important sum for the 11th standard. So for this we have completed the adjustment of the final accounts. There might be adjustment entries also for the final accounts. Okay, so like all these stuff, adjustment entries and all is there. That part I will teach you in the next class. Okay, thank you.